Now, the all-share index of the Nigerian stock market is actually up about 18% quarter to date. Rotimi Fakayejo, a stockbroker and capital market analyst, joins me from Lagos for more on the stock market. Rotimi, always a pleasure to have you share your expertise with us on Closing Bell West Africa. So following last week first, a 4-day trading activities, which of course was largely bearish last week. We also have a first day trading activities of the week today closing in the red. What were the major activities that moved the markets today?
Well, it's all apparent that there is still a lot of apathy towards investment at this time. Investors are actually apprehensive of taking new investment at this time, and some also go to the extent of selling off what they have to a great extent. But one good thing that is not happening right now is that the bearish run is not as significant as could cause any form of panic. So for today, we have seen that it is Stanbic IBTC Bank and Nestle, and Bois Cement are actually responsible, coupled with Nigerian Breweries, for the drop in the market today. Ordinarily, the kind of gain that we saw in Nestle Nigeria PLC was more than sufficient to actually put the market in the green after the close of trade. But it didn't happen because it was submerged by the drop in the prices of Stanbic, Nigerian Breweries, and Bois Cement. So I think all that is responsible for all of this is investors' apathy. The risk appetite is very low at this time. Investors are really very cautious about what to take in because of the living pandemic, and everyone still thinking that there could be a second wave of lockdown. So that actually is responsible for what we are seeing right now in the market.
Rotimi, clearly some bright spots coming from your talks about the fact that the bearish run in the market's not significant enough to cause a panic. But as we approach gradually the end of the first half of the year 2020, what's your general assessment of Nigeria's equities markets?
Well, I think in the first quarter, the market really suffered a downward trend. And that gave it a double-digit negative position. But thereafter, we saw the market doing much better in the second quarter. And what may be responsible for this is the aftermath of results which came for the first quarter results after the market had already taken the audited final year figures of companies. But basically now, my thought on all of this is that come the third quarter, when we are going to be seeing the effect of the lockdown in the second quarter results, the dynamics may change to a great extent. And I believe that this is also what is causing a lot of investors to be very cautious as we approach the end of the second quarter.
Now, Rotimi, there's much conversation, of course, off the back of the COVID-19 pandemic about how much and what really capital markets across the world can do in their role to further boost economies across the globe. What's your thought about this? Would you say that the capital markets in Nigeria has been able to pull its weight thus far?
Well, I would say no to that because a lot of strategies are being put in place to mitigate the effects of the pandemic, but not much has been achieved in that respect. And I think everyone making efforts, they are not resting on their oars yet. But I believe that is something that we have come to live with, at least for now. And I believe that people will begin to reinvent new ways of doing businesses, and that will go a long way. So what is most important is the figures that will be churned out from the quoted companies that will determine the performance of those companies on the board. But as it is right now, there is really very little dynamics that the Nigerian Stock Exchange or the equity market in general can put in place, except that which affects the general economy in the country.
So also as part of measures now, we have Nigeria talking about reassessing its capital markets master plan in order to review the current realities. How much changes do you reckon this will bring to the markets?
Well, I think two major focus that have been in the market with respect to the reform has been the dematerialization of certificates and also the e-dividend, electronic dividend that has been enforced and put in place by the regulators. Looking at other aspects of the market, I believe the investors generally have lost confidence in the market, and that confidence has not been restored till now. Because one thing that is very key is that everyone believes that the Securities and Exchange Commission is not as protective of investors as the Central Bank of Nigeria is protective of depositors. And we've seen that happen in a number of cases. The recent one is Sky Bank, whereby investors lost all their investment. It's going to be very difficult to be able to convince such investors to come back to the market at any point, at any time soon. So these are some of the things I believe they have to look at. There needs to be a holistic approach towards protecting investors. Investors' interest is not limited to their shares being sold or they having an authorized sale by brokers on their account. No, that one has been taken care of and the market has overcome that. But what happens to the main investment as regards to the activities of the quoted companies in the market? And I think that is a major aspect of the reform that the market has to look at to restore investors' confidence and also to co-opt the participation of all in the market. The pension commissioners, the PSAs have not really been investing in the market as they ought to. The insurance companies are not investing in the companies in the market as they ought to. And I think that these are the kind of reforms that the Securities and Exchange Commission should be looking at in order for us to be able to at least propagate the market in a way that it will last long.
So I'm looking at figures from the NSE's weekly report now, just trying to see which of the major sectors are actually able to pull their weight or maybe gaining some interest from investors. And Rotimi, from what I see here, looking at the week-to-date figures and the year-to-date figures, the insurance index appears to be the one in the positive region. Week-to-date change 3.69%, year-to-date change 7.90%. There are a few others are in the negative territory. Which sectors are specifically still maybe attracting some interest from investors at this time?
I think basically, if investors are really making the right move in the market, and the concept has always been buy low, buy when others are selling, especially when the fundamentals are right. So if you look at the consumer goods sector, I think is attractive. The banking sector is attractive. Likewise, the industrial goods. And I think investors can make good choices from these three sectors. And I believe that they really won't miss it. Because one thing that is still very key for the Nigerian equity market is that the dividend yield is still mouth-watering. And if we are talking about 12, 15, or even in some instances, 18%. And I think those sectors are really worthwhile in guaranteeing investors that kind of dividend return on their investment.